Sunday, November 13th, 2022. So for some people, this will be the most important video. This is my trading plans going to the week of November 14th, 2022. So the past week, phenomenal. So 2 weeks ago, I was so busy with real estate. I just closed on 2 properties. So that Monday through Thursday, I didn't really do much trading. I was going back into trading on Friday, which was 8-9 days ago. And this past week was magical. Monday, Tuesday, and Wednesday, magical. So if you look back to my video about 2 weeks ago, I had about 15 or 16 puts. I think 15 puts. Right now I have 15 puts again. But on Wednesday, I could have closed on Wednesday. So Wednesday I traded six in and out 6 times the puts. Monday and Tuesday, I was trading DWAC, Digital World Acquisition, the Trump SPAC that hasn't de-SPAC. I traded that, I think 3 or 4 times. My initial investment was $1,900, and if you take each trade, my profits from each trade, I got 1,300 out of 1,900. Had I held the puts, but you know what? It's not hindsight. I would have made more than 1,900. If I would held some of the puts. DWAC came down to 20. But that's it. You know, we take a profits and move on. Wednesday was magical. I covered on 3 or 4 puts. And you know what sucks is, you know, I was up on SAM, S-A-M, Sam Adams. I was up on Toast, T-O-S-T. I was up on like another 2 puts that I didn't cover. I might actually lose on GameStop puts this coming Friday. I have November 18th, 20 strike, and GameStop was 21.80 on Wednesday. 21.80 on Wednesday, but retail, not too bright, pump AMC and GameStop Thursday and Friday, and AMC had disaster earnings on Wednesday. But they pumped AMC and GameStop, so I'm down, but it's okay. I don't mind if I'm down because overall I'm up like 10 G's on GameStop puts from the year. I lost one put before on GameStop. I might lose on the November. I have December puts also with the 20 strike. But by December, Apes might wake up. Now, I don't know if they're going to wake up. You would think that after AMC's earnings on Wednesday that, you know, people would leave GameStop and AMC. That's what I thought. And that's what was happening. AMC was almost $5 and Ape was like $1.20. I think $1.20. GameStop was $21.80. And then Thursday, after the CPI, 7.7. You can't make this up. 7.7. GameStop and AMC rallied. So I don't know. The Apes are coming back to companies that are just going to dilute you and shaft you, and you guys haven't learned your lesson. So you know what? Get burned, because I'm trying to help, but get burned. Anyway, so on Thursday, I opened up 3 more puts. So on Wednesday, after everything was crumbling, I was doing my puts. It was phenomenal. It was like magic. Monday, Tuesday, Wednesday was magic because naturally we got down to like 10,250. My trading range on the Nasdaq is 9,250 to 10,250. S&P 32 to 3,500. So we were getting close to that. I think the S&P was like 3670 or 3680. And then Thursday, the CPI. So on Thursday, I opened back Wix puts, Chewy puts, and I think Boeing puts. Because Friday I opened up another 2 puts. Or no, maybe Friday I opened up the Chewy and Boeing puts. But regardless, I opened up coin puts. On Friday, sorry about that. On Friday I opened up coin puts. And Thursday I opened Chewy puts. I don't even know. But I opened up 5 puts on Thursday and Friday because I was still bidding on puts. This week coming, so I'm holding 15 puts right now. This coming Friday, I might lose on Sava puts, S-A-V-A. And it's very unfortunate because the first day after I bought the puts, like 7-8 weeks ago, I was up like 75%. I didn't take it. I might lose on NTNX puts. I was never I might have been up 5%, but I'm not going to take 5%. I might have been up 5%, but there's rumors that MTNX is going to get a buyout. What a disaster. The company is not even worth 15. But because the rumor, that FUD, it went up, and I'm going to lose on my puts. So, I hate that. I don't mind losing a put on stuff that I know, or a call on stuff that I know. But I hate losing when it's something I don't know. But now that I mentioned call, the only call I had was MCFT calls January for 25 strike. I didn't put too much into it. I think I put about $700, $750. But that's $700, $750 because it's a cash cow. MCFT is a cash cow. I made like $400 with $700. So percentage wise, I made over 50%. Now, speaking of the calls, Rite Aid hit 625 on Friday. I had calls less than a month ago, like 3 weeks ago. I bought the calls for 45 cents. January 5 strike rag calls for 45 cents. I sold at 60 cents. You can't blame me. 33% I made in like 2 days. Rag calls that I sold for 60 cents was worth like $1.80. That $1.80 saw off 400%. But you know what? We're not trading in hindsight. I like to take my profits. But this week coming, I would like to buy. So I have 15 puts. I would like to hold up to 5 more puts. I'm planning on getting 2 to 3 months on them because retail keeps pumping stuff up. So the more time that you buy, the less money you're going to make. You're going to pay more money for the put. So you're going to make less. You're going to pay more money for the put. And the strike is going to be closer, and you're not going to make as much. Oh, I bought Peloton puts. That's what I bought. I bought Thursday Peloton. So I bought Chewy, Peloton, and Wix on Thursday. Friday, I bought Coin, Peloton. Man, I bought 5 puts. That's what I'm saying. I'm doing so many trades. I don't even know, but I'm putting screenshots on Twitter. So Friday, did I buy Peloton? I think I bought Peloton on Coin on Friday. Thursday, Chewy, Boeing. You know what? Let's not even get into that. But I would like to get 5 more puts, but not in one day. So I'm going to buy the puts only if the market rallies a lot. So if I see these stocks up 10 more percent, those are the ones that I want to buy puts on. So what I've been doing, I've been buying puts on stuff that rallies, it way over rallies, and I try to sell the gap up, I don't want to buy puts on something, if it's not up a lot. So I like to buy stuff that's a disaster, that doesn't make money, but still it's rallying. Like a firm, for instance, a firm had horrible earnings, horrible guidance, went down to $11.97. Early on the week on Friday was $17. It went up 50% on nothing, on CPI data, on nothing. So I want to do a firm puts. I might even add Upstart back into plays. Let me see what it's at. I don't even know. I took it off plays. I took a firm off plays too because it was $12. At $12, I don't like the risk reward. But at $17, here we go again. Why not? DraftKings, I think it was $11. It rallied to 15 off of horrible earnings. And I think I'm gonna have to add it back to plays. Same thing with Peloton. I want that Peloton because it dropped to $6. At $6, I don't want it puts. Then it went up to $10. Snap is like $11.50. Company's disaster. But these are the things I want. I have Snap puts, but I have Snap puts for January. So I don't want to buy the same put. I want to buy different puts. I want to buy up to 5 more puts. I don't want to hold more than 20 puts. So I want to hold at most 20 puts, and I'm waiting for something to gap up, and then I short it. I short it off of a big rally. Now my plays list, I have 300 tickers on the plays list. Like 100 of the 300 are stuff that I want to short. Other stuff is other stuff, but my maximum is 300 tickers. So there's 100 tickers that I'm watching. that are overpriced. So whenever I get out of a put, I have something lined up. I always have something lined up. The thing is, I already have 15 puts. I don't want to double down. In February, when everything was working, I was holding almost 50 puts. So 50 average $2,000. I had like $100,000 in options, and that's not normal. I don't want to do that. Even when I was younger and I did a lot of options, I didn't have more than like $20,000 in puts. So it's because put options are a completely different thing. You have to be willing to let it hit zero. So that's my plans going to trading November 14th. You guys are rallying the market off of bad news. I agree. 7.7 is better than 7.9, but it doesn't change anything. Rate hikes are going to keep going. We're going to see rate hikes early next year between 4.5 and 5.0. That's it. That's said and done. And you know what? Earnings are going to be bad. So if earnings are going to be bad, interest rates are going to go high. You guys are rallying. You people just make me laugh. Put city. That doesn't change until rates stop, rates decline, or earnings go up. Do you see that? I don't see that. Wake up. Let's go.